Maybe you're an investor and you're wondering about Nvidia. Does the stock continue to climb up, or is it time to look for other better alternatives? In this video, we're gonna try to figure out what are the advantages that Nvidia will offer you as a stock investor, especially since they have undisputed leadership in AI GPU acceleration. In order to figure out if the stock will go to $200 by sometime next year, we have to figure out why the company skyrocketed over the past 18 months. And one of the main reasons is the earnings per share, which you can see had an explosive growth from the summer of 22 through late 2023. So you can see by the summer of 2022, they earned 3 cents per share on a quarterly basis. And then all of a sudden, the earnings was to 49 cents by Q4 of last year. And that's a 15x increase in year and a half. And that is best visualized if you look at the stock price. So stock price in summer of 2022 was, here you can see, around 16, 17 US dollar. And then it 10x'd over the past 2 years to 120 or 130 US dollar. So the question now is, how much will the earnings per share increase until, let's say, next year? And in my opinion, most data points to the picture that the demand is strong. So before we look at the actual numbers, we can see that, for example, this gentleman here on Twitter, he is speaking about the number of TSMC CoWoS capacity. So CoWoS is chip on wafer on substrate manufacturing capability that Nvidia has to use because these chips are so big, so they have to package them together, or let's say in more layman's word, glue them together. And CoWoS is that technology that makes that happen. And everyone that you follow that has some sort of relation to the industry, for example, Beth Kindig, she's also talking about TSMC's insane CoWoS capacity expansion, and how Nvidia and AMD has essentially booked most of the capacity. We can also see Dan Nistet also talking about the same issue, that TSMC is doing everything they can to make plants going online for CoWoS packaging. So we know that the demand is strong. We know that, for example, as the revenue grows, you will see efficiencies coming into the picture. For example, R&D will be a much less percentage of the company's revenue, whereas in beginning of 2021 it was around 20%. Now we will see R&D being less than 10% of the company's revenue, and that's coming from economies of scale. We can also see that the gross margin, which was at 43% in Q2 of 2022, it then started to expand, so it's around 75% right now. Although I haven't modeled for any more expansion, I think this is where it will peak for the moment. I don't think the customers will pay more. Maybe we'll see 80%, that would be insane. But let's be conservative and have 75%. And having 75% of gross margin, how much earnings would that actually be? So for that, we need to go back to the Nvidia EPS chart. So you can see that according to my model, by end of 2024, they would make around $1 per share. And let's say if I'm a bit conservative, so let's say if on average they make almost $1 per share in 2025 per single quarter, that's $4 per share in earnings, right? On annual basis. So we can see the analysts have their expectations for full year of 2025 at around, let's say, I don't know, $2.6. And the highest part of the forecast is at 2.84. So I have them up substantially higher than the analyst. So this could maybe point to the picture that the analyst at some point, let's say when the Q4 earnings comes out and they gave their guidance for 2025, maybe then they will raise their their price targets, which is something that we've seen every time with these big companies. They never increase the price target before the actual the numbers are out there. They have to wait and see for example, full confidence from the company when they gave their guidance for the next quarter. That's only when they kind of increase their price target on a usual basis. There's always some other analysts that are kind of seeing this before it happens, but most of them are following rather than leading. So based on that, I think I'm ahead of the analysts. But even let's say if I'm too optimistic and they have a, let's say, I don't know, earnings per share that is close to 80 cents per quarter on average, that's still $3.2, which is substantially higher than the 2.6 that they have for 2025. And in my opinion, if the stock will go to $200, And if we follow by my numbers of, let's say, meet in the middle at let's go with 3.6. So if you take 200 US dollar divided by 3.6, that would give you a price to earnings ratio of 55 times. It's very expensive, but that doesn't include, because by the time you buy the stock and you're in the middle of 2025, you're obviously looking for 2026 numbers. And it's difficult to know how the demand will look out, so much far ahead in the future. Will there be a AI market crash? We don't know that. But if it isn't, it wouldn't be surprising to see that these numbers will increase, although at a slower and slower quarter over quarter increase, which you can actually see. For example, if you look here, you can see that the revenue quarter over quarter kind of exploded in Q1 of 2021, Q2 especially 2023, sorry, and then it increased by 30%, 20%, 17, 15, 8, and so on and so forth. And it will slow down to, let's say, 7% or 5% at some point. And this is unless there's a huge market correction in terms of demand for AI. We don't know that. All I know that the demand is fully out there right now. Every supplier downstreams kind of points to the picture that they do everything they can to expand the production capacity. We know that Nvidia, according to my models, for example, if you look at the CoWoS capability, so by summer of 2024, TSMC's full capacity should be around 20,000, give or take, 10-15%. It's difficult to know those numbers for exact from an outside point of view. And Nvidia would have close to half of that, capacity. And as TSMC expands, Nvidia also expand. I was kind of being, asked the question, so should I think of it as if Nvidia takes more and more percentage of the TSMC capacity or less and less? I think it's better to be conservative. So whereas in, let's say, summer of this year, they had around essentially 45-50%, I went with closer to 35-40% by summer of next year or end of next year. And this is only to, not have an insane kind of expectation for Nvidia. You can see that even if they have a 26,000 wafers per month capability at the end of next year, that would represent around 700,000 to 800,000 H100 chips manufactured each month. I mean, that sounds insane, to be honest. It's difficult to know how many good chips they will be able to get for each wafer. I went with the number 30. It could even be less. It could be 25. Difficult to say from outside point of view. It's just to have some kind of very, very rough ballpark number. And also the number of wafers, same there. I have no clue, if it's 22,000 or if it's 28. I just went with 26 just for a very, very rough number. But I would say even if you're conservative, you could expect around 500,000 Nvidia AI chips. Now here it says H100. Obviously by end of next year, that's gonna be most of them will be B100 and B200s. But it's just think of it as Nvidia chips capability. And I have obviously the same number for AMD. But yeah, so I think the capacity is there. We know that the demand is there. We know roughly how much CoWoS capability they have now. So unless there's a huge, decrease in AI chip demand, I don't think 200 is out of the play. I think Nvidia, if they show by early next year, if they show that there is still going, to be more demand, and if they're still ramping up, in that scenario, I definitely don't think that $200 by end of next year is unrealistic. But you have to be also cautious of, the downside. And the downside is either their margins takes a larger hit. We know that there hasn't necessarily been a warning yet. I don't think it's a warning, but they mentioned on Q1 and Q2 that for the entire year, they expect 75% gross margin. They started by 78% in Q1. And then they decreased that number to 75 in Q2. And if the average has to be 75 for the entire year, then Q3 and Q2 should be around 75 and 72%. So it kind of points a picture of maybe the margins have peaked already. That's a possibility. And maybe, for example, here we can see the graph. The green part is the margin. So what if AMD and Intel and Broadcom puts more pressure to Nvidia and the margin goes back to this level, 63%, 64%? That's the downside risk. I don't think that's gonna happen in the next year unless there's a huge AI demand, lowering of that. But other than that, I think, 200 is definitely in play, and we know that price target right now is, on average 153 according to tip ranks. And I wouldn't be surprised Q3 and Q4 comes in and they increase it to 170 or 180. So with that, I think the price of the stock right now is not necessarily, highly overvalued. I've mentioned this before. I think the price of the stock is, you could say, a bit expensive, but it's definitely in, realistic realm of possibility that the company will expand on their revenue. And if that happens, and if the margins, continue just at this level, they don't even need a margin expansion. Even the margin expansion would be nice, even if they continue at these kind of levels of, 75%. As their revenue increases, I don't know, to close to 40, 50 billion in quarterly revenue, maybe not 50 in the next year at least. But if 40 billion is definitely possible, I think by end of next year, that's enough for to increase their net income by a huge amount to maybe, I don't know, 1.2, 1.3 even US dollar, and that would get us to earnings per share over 4 or 5 US dollar. So again, difficult to say. This is not investment advice, but I think this is how I see it. And please like and subscribe, and please engage in the discussions, and see you in the next one.